Good afternoon, everyone. I hope you haven't had a heavy lunch, and I wouldn't need to get you through some exercises. But from the earlier note, I think starting with a clap might be a good idea. So can we have a round of applause for ourselves? Okay, thank you. So my name is Abel, as Yusuf introduced. I work for FSD Ethiopia. FSD Ethiopia has some of the work we do. Fasil was talking about it earlier. From those, I lead the financial inclusion pillar, digital finance pillar. So I will have this afternoon session around banking and inclusion. I have an interesting group of people who will come here and then present their experience and their perspectives, which I believe are very interesting. So far, we have always gone outside Ethiopia to look for this kind of inspiring experiences and perspectives. But now we have them here, so we are having people who have done it right here in Ethiopia, who have succeeded, and then we'll be hearing and learning from their experience. So first up, we will have a brief presentation from Endeshaw Tesfaye. Endeshaw is a DFS expert working with the UNCDF. He's leading the DFS for Resilience program with UNCDF. Endeshaw has more than 17 years of experience in this space. He has worked in the private sector previously. He's one of actually the people who was working in the digital finance, mobile money space in its early days. So he has now moved into the development space, and maybe he'll share his perspective from that angle. So his presentation is around literacy. I hope you will have an interesting presentation from him, and then we'll bring him back later for a quick set of Q&A later. Your hands, please, and welcome Endeshaw.
Good afternoon, everyone. Happy to be here. It's a heavy task to be given a presentation session in the afternoon after a good meal that was prepared by iCapital. So we'll try to make my presentation as brief as possible and try to give you insights around the role digital and financial literacy plays in inclusion. So I will directly deep dive into the presentation and we'll be going through it. We'll focus on the role that digital literacy and digital financial literacy play in financial inclusion in East and Southern Africa, or the best practices that we can get from other markets, where we will also be looking at what we have in Ethiopia. When we look at both items, digital and financial literacy, we have to be standing in two different locations where someone need to have one, the financial literacy capability, and two, the digital aspects of it. When we speak about financial literacy or the capability, it is around someone's ability to actually manage their savings, manage their finance, their well-being, and also including even further going toward this ability, toward this utilization of the funds, you know, like ways that they borrow, how am I going to be able to pay, and so on. When we go towards the digital literacy aspects of it, it's more of ability toward this utilization of mobile phones, computers, the internet, and others. When we speak specifically toward this digital financial literacy, it is a combination of both. How consumers will be able to utilize technology in managing their financial needs. So from that perspective, it is a critical aspect that consumers, especially countries, need to work on towards achieving a higher rate of both digital and financial literacy in countries, towards expanding financial inclusion. If we ask ourselves why does digital and financial literacy matter, what you see here, it is an assessment, a survey conducted by the economists on what the future holds for the banking sector in the next decade. And as you might see it from here, in terms of most influencing factor for the banking sector in the next decade is the emergence of digitalization of financial services. It is an opportunity, and partly it is a risk area. At the same time, we have emergence of digital currencies and increasing cyber securities towards this banking sector in the future. So by taking this into consideration, the activities that we are doing towards financial inclusion, we need to have, we'll be able to move. One, we have a high risk and high usage, and we will be moving towards a low usage and low risk, low skill arrangements in the adoption of digital financial services to bring in financial inclusion in the country. In this aspect, for example, the first aspect of it, which is financial inclusion, it is mainly around having the basic skills to utilize basic digital tools, or even having the basic financial skills to utilize them. On top of this, if it is coupled with attitudes and behaviors to utilize this kind of systems, there will be a chance for a country to increase or to bring in financial inclusion in the country. Immediately after that, if we want to move into financial health, and then at the end of the day, resilience, we'll have to move from one, access to useful financial affordable services. We'll be able to move toward this control over how money is used to support the livelihood of any householders or even an individual. And if we move toward this resilience, the individuals that we are trying to include at a country level in the expansion of financial service, we'll be talking about planning for the future, how I'm going to manage myself, how I'm going to manage my retirement at a later stage during the retirement phase. So if we look at this, it will take us into the digital tools that are available in the market. This is an old data, just I'm presenting it here to bring in perspectives. In the data that was in an assessment that was conducted in 2017 by the World Bank and National Bank of Ethiopia, the number of individuals that have responded that they cannot use mobile computers, it's closer to 90%. And those that do not have access to the internet is over 80%. But the people that are actually able to use mobile phones are over 60%. This number has grown by far after 2017, as we have seen it from the recent Findex data. The account ownership has rose from 35% in 2017 to 46% in 2022. So from this aspect, there is a big opportunity to bring in financial inclusion in the country by utilizing the basic phones that we have in our Andes, be it in cities or in rural parts of the country, to actually push services. And in this, with mobile phones, for example, earlier we were discussing about the adoption rate of mobile money in Ethiopia. How mobile money is successful in Somali region of Ethiopia, and how it is not it's not catching up to that of the Somali region in the rest part of the country. not just only that there is a need toward this achieving account ownership because of digital literacy, there is an issue of attitude and behavior in accessing or using new items or new technologies to access services. So the mobile phone penetration even can increase because of such arrangements, because people can actually access financial services using that. If we look into digital financial literacy, like what is it going to bring us? What can it do for us in building financial inclusion in the country? So in terms of what it can do for us, one, it can actually increase awareness around digital and financial services that are available in the market. Two, it builds skills in using new technologies and whatever new use cases that we have in the market to push delivery. And also increase adoption for utilization of different products and services. Digital and financial literacy can contribute to that. And also it builds up trust and confidence by the consumers to actually utilize these services. And in terms of what it cannot do for us, one, it cannot just simply change or increase by simply an uptake and usage of digital financial services. It doesn't have a direct impact on that. Yes, it can build trust in others, but also there is a need to build the confidence, trust, and others in actually utilizing this platform. So when we focus on awarenesses on how the consumers can utilize such services, it will help us increase that. So that change cannot purely happen by having literacy around digital and financial services. The other is increase financial inclusion directly. It will not directly bring us that. And the other is improve outcomes for learners if it is not contextualized. Usually, what we miss in pushing such literacy programs is contextualization. If we just simply take the case of Ethiopia, for example, there are over 80 ethnic groups, and in that aspect, we need to actually contextualize the setting in that group, and also even we have to contextualize it in the rural, urban, and also even we have to take it into consideration men, women arrangements to deliver such literacy programs in running them. So there is a contextualization aspect that we need to bring in. The biggest item we have here, for example, in terms of behaviors, one in terms of in access and usage of digital tools, we have different learnings from other countries in the world. One in terms of integration, two in terms of materials, and the other is in terms of case studies that we can possibly have from the ground, rather than waiting, for example, for some years to start implementing services. We have to look into what kind of on-ground activities do we have there. So when we talk about integration, there are heavy governments in Africa. They are the biggest buyers and the biggest buyers, and there are bigger G2P payments that are happening. So integration should be or could be included in such G2P platforms. For example, in Ethiopia, we have bigger safety net projects, safety net payment programs in the country, where hundreds, millions are paid in the rural part of the country. If such digital and financial literacies are embedded in it, it will be much easier to increase usage and also adoption of financial services. And usually, when the government builds this, everyone comes and follows, including be it consumers and also even financial service providers. The other is even within the integration, as a regulatory body, for example, within NBE, it can make it part of it is regular oversight activity on how such tools can be used by financial institutions to increase expansion of financial service in the country. When we talk about materials, there is a need to build curriculums and also training materials or toolkits that can be used as a best practice in the finance sector, in the financial market, to actually utilize the services, the financial services, or even to increase adoption of financial services in the country. So there are experiences in other countries where financial and digital literacy programs are embedded in the curriculum of the education system, starting from the primary schools. And for example, in Bangladesh, there is a program called Her Finance. In Rwanda, purely focused on education of digital financial service. There is a Hey Sister platform, which was implemented in Tanzania and Rwanda, and as UNCDF as well, with Ministry of Innovation and Technology. It's one program that we are going to run in pushing digital financial literacy in the country. The last part is in terms of case studies, rather than while pushing for such materials to be embedded in the curriculum of the country. On the ground, there has to be other toolkits or training materials that should be implemented or that should be used by be it financial institutions, development agencies, and others to push learnings in digital and financial literacy to create adoption of financial service in the country. So the same thing, I spoke about this in terms of uptake and usage of digital financial services. There are different lessons that we can get from these countries, where one country takes the route of implementing digital and financial literacy at a lower level. For example, with digital skills in Ethiopia, recently, the ICT capability is now lowered to 7th grade, but in other countries, you can see that such activities are even lower. Starting from grade 1, such capabilities are included, and others, they build toolkits where anyone can access from a free platform to deliver the service. Maybe as a last slide, in terms of account ownership or into how digital and financial literacy contributes to the adoption or inclusion in financial aspect, like the recent Findex data shows us at a global level, there is an account ownership of 76%. And if we look into the neighboring countries, you don't see Ethiopia here. In Uganda, we have 66%, Kenya 79%, and Singapore 97%. The same thing, if you look into the literacy level in mobile money accounts across the board, the higher the literacy level, the same goes for digital literacy as well. The higher the literacy level, there is a tendency with people to move into the higher skill that they need to actually implement. And in terms of accessing mobile money service, the current GSMA data shows that there is 1.6 billion mobile money accounts in the world, where in the last 5 years, the 800 million users were added in the last 5 years. And if we look into Uganda and Kenya, we have 30 more and 64 million. The same thing is happening in Singapore. Maybe food for thought and a question for everyone. For Ethiopia, I'll be leaving that as a question for you. Where are we in terms of account ownership, in terms of literacy, and also the mobile money accounts that we have in Ethiopia to push and increase account ownership and be inclusive of financial service, be it in urban and rural area. So thank you very much. I'll stop here.
Thank you, Endeshaw. But he has raised some good points around financial literacy and digital financial literacy. And this is something very important in our context in particular. The issue of contextualization he mentioned is something to consider given the diversity we have here. Maybe we'll come back later during our Q&A. But people usually think financial literacy is only given in a formal setting requiring heavy effort. So maybe you could light that up for us later.